Hello, hello, hello. How's everybody doing? This is 50 Pips rocking and rolling, 17th of May, 2015. Not making any trade calls or recommendations because you own only your response for the trades you may decide to take. And the fact you're listening to this means you've read, you understand, you accept all the disclosure disclaimers on the website, understanding that we're just performing some technical analysis in a learning context only for educational purposes. So what's going on, guys? I mean, not feeling too inspired really. Everything's still chopping around. We're still waiting for some bigger levels to be tested, and I think the market's still waiting for some bigger catalyst, right? As we go into this week, what's going to be interesting is that we do have a fairly constant stream of data coming out. Monday might be a bit slow. Tuesday, we've got, monetary policy meetings out of Australia. We've got those inflation expectations out of New Zealand with the CPI to the UK. So that should be interesting. On top of it, we've got ZEW, which is usually a mover. And we do have building permits, Bank of Canada governor speaking, and that GDT price index out of New Zealand. So that should be interesting. Tuesday, we should have a fairly steady flow of stuff going on. We got GDP out of preliminary GDP out of Japan on Wednesday. We've got some light Canadian and UK data with those bank rate votes. But really, Wednesday the key thing is going to be the FOMC, as we know. Everybody's data depending, looking at this US data and wondering what the US is going to do in terms of rates. So clearly we got some potential for wheeling and dealing on Wednesday. Thursday we have that HSBC out of China. We got all the PMIs coming out really, so that's going to be interesting. Retail sales out of the UK too, unemployment claims out of the US, Philly Feds. So again, another interesting day. And then as we go into Friday, BOJ, we got IFO, we got Carney speaking. We've got the core CPI out of Canada. We're going to have Draghi speaking. We've got the Karuta speaking. So again, it's going to be a fairly interesting day. Now keep in mind that as we go into Friday trade, right, we're going to be going into a long weekend, right? Because basically the 25th, so May 25th, we're going to have bank holiday in Switzerland, bank holiday in the US, bank holiday in France, bank holiday in Germany, bank holiday in the UK. So again, a lot of people will be off. I'll definitely be off on that day, and we also have the G8 meetings going on. So it could be a bit of a funky day. I don't think it's going to be a lot of edge trading that day. It's much better to get rested, take some time off, but that's pretty much what it is, right? And so if we're looking at the charts, again, I think a lot of people have been asking me about Euro and cable. So what to say? If you look at Euro, we talked about this whole the fact that those 1230s were the pivotal level, right? On this initial ramp back up, we said keep an eye on what's happening here, because if the shorts are going to come in hard, they'll probably come in at the 1090s, right? That's where the first round of selling should be waiting. Previous support acting as resistance. This is where the aggressive shorts should come in. And what happened here actually? So you see that basically previous support did not really act as resistance. As we went knife through butter, we got a fairly pure close at the 100 moving average, again 200, 150 on the daily, and then we come back down. This support held again, right? Not only on the first break, but it held again, and then bam, we're just rotating higher, right? So as long as we hold above these 1230s, we could easily see price continuing to rotate back into these 1640s. Now, I know a lot of people are going to be starting to talk about 119, 120. You got that kind of gap open from the beginning of the year. I think that's a bit premature for now. And as I've discussed in the past, I wouldn't be surprised that, unless we get some really big catalyst or something, Euro will end up, spending a lot of time chopping around, broadly speaking, 116, 40s to the upside, maybe back down to these, 109s, 108s, something like that. We could see a lot of chop around this area. So what to do? Well, I think the tricky thing is this action, as much as, in terms of if you're looking just to, I'd much rather be looking for opportunities to get short rather than get long here into these highs. If you look here, you've got some previous resistance zone. But I think here it's not a super interesting zone. You know, most likely if you're riding longs, there's not an awful lot of reason to cut your longs, right? You want to continue riding them, see if you can get that move back into the 1640s. And you know, if you're building swing shorts, there's not an awful lot of reason to really stop building those levels, even on a structural point of view. So it's just going to be likely going to see a bit of choppy trade. Now, again, we like to see healthy markets. So in terms of healthy market, we'd see some kind of a pullback would be healthy at this point here. Going into the week, what would I be focused on? Well, if you just look at where we're opening here, right, you know, above these highs where we got sold, this is basically, what is this? This is a 114, right? 113.88. And it looked like there was market really protecting that 114.50, right? We saw a lot, you know, the play towards the end of the week was really those shorts trying to scalp with stops behind that 114.50. Looking for that level to hold, and now we're breaking higher. So what I would really be focused on here, at least in terms of short term, you know, I would definitely have this little dip low on the chart, and then I'd be focused going into the week, right? What is going to happen at the 114.50 level, right? This is likely going to be the big pivotal, what we would call the bull bear line going into the week, right? Going into the week right here. If into Monday trade, through Monday trade, we hold above, we close Monday above 14.50, then I would not be surprised to see us taking a very aggressive stab to try and move back to those 116.40s very, very quickly, right? However, if early on Monday we can't get some traction above the 14.50s, those 14.50s keep on getting sold, and we close below 14.50, well then also, you know, we might easily see a very quick move right back down into those 12.30s. Now, don't forget that depending on what happens on Monday or Tuesday, you know, we're going to be moving towards that big event risk, which is the FOMC, right, on Wednesday. So it would not be surprising to see some of the longs try to book some gains, so some kind of correction back down as we go into Wednesday, especially if we can't get any traction. So, you know, let's see what happens. But that's pretty much the area I'd be focused on, the levels I were looking at. Again, I don't think it's particularly interesting. That's the way I'm reading it. I was really hesitating today whether to do an update or not, but I thought it was a bit lame not to do an update so, you know, let's just talk through these. I thought, you know, let's just do a couple of charts. You know, a lot of people, yeah, well, you know, let's do cable. Let's do euro on cable today. So what's happening on cable? So cable, we've had a very aggressive push right back here, you know, and globally speaking, you see that for something very aggressive to happen, you know, in terms of breaking out of a big range or in terms of a weekly chart, you know, we have to have something really serious happening. If not, what's the most likely course of action? Even though we get some wheeling and dealing, clearly your best bet is not to try and get aggressively long at highs, right? Because it's healthy to see some kind of a pullback. You know, price does not only move in one direction. And equally, after such an aggressive move down, you know, the play is not to try and get desperately short, aggressively short on just break of those lows, because most likely what you're going to get, especially we talked about this chart in detail, this is a very pure long. You can go back in the videos, we talked about this in detail, you know, into the election risk, and bam, we're pretty much back in mid-range. This is a weekly chart, 200 and 100 on the weekly. So what would we expect to see? You know, all things being equal, we would expect it to be healthy to see some kind of a pullback here. We definitely would not be buying into a brick wall, buying into highs, even if this could easily continue to go higher. That's not what we look at. So what we like to look at is some kind of healthy action. So, you know, here, you know, there's a lot of confluence here. It's pretty much a mid-range. You've got two big pivotal levels. You've got those two moving averages. You've got the 50 back of the move from that pretty much false break to the upside, false break to the downside, you know, retracement of this move coming in at 158.70s, right? So, you know, on approach here for me, you know, it's more looking to play some kind of short, not def, or pare back some of the longs to maybe even reload, not to get open, initiate new long at highs. So going into the week, you know, that's the big level to that's the big level to watch. I mean, if we flip back on a daily, clearly you've got a couple of zones here that you want to watch out for, right? If the market can't come up and try and take some stops out, take out maybe some weak shorts and cause some pain early in the week, if it does so, the level to watch 158.70s, right? And it starts to pare back, what I would definitely start to look at is the confluence zone, which is going to be coming in here with this moving average. You've got this previous resistance that should act as support. You've got this previous resistance that should act as support. So here, especially at the beginning of the week, if we don't have a lot of data, we could easily start to see some kind of ping pong action in this whole area, whether you want to call it pretty much 155 to 156, and then up here you're talking about 157.70s into 158.70s. Let's just double check. Yeah, this is what, look at that, to the pip, pretty much the 70s. So you've probably got, these are the two funky ping pong areas, 100 pip area to the upside and 100 pip area to the downside, so that's what I would focus on. And, we really need to see something serious happen for us to drastically try and break outside of that range. So again, interesting week, I think, fairly constant data stream. Don't forget that we do have the event risk from Greece always. We're going to have that G8 coming up. There's a lot of data points throughout the week. So, let's see what happens. Let's see what gives. Let's hope we get some interesting action and probably as we get, maybe not next weekend, but as we get into the new month, we'll do a full 1 hour live Sunday webinar so we can just go through, 10, 15, 20 charts, whatever, anything anybody wants to look at, okay? Thanks for listening, guys. Have an awesome rest of your weekend, wherever you may be, or awesome start to Monday, wherever you may be. Catch you guys for London Open. Have an awesome one. Thanks for listening. Bye-bye.